Hello, I'm Chad NeSmith, Portfolio Manager at Device Financial Advisors, here with another monthly market update. The S&P 500 is up about 6.5% this year. It just crossed the 5,000 level in the month of February, so that's really exciting news. It's being driven by AI and NVIDIA. That's up about 60% year to date, which is pretty wild. A company that large is performing so well. It's really driving market returns. The bond market is down a little bit this year as we've gotten some higher than expected inflation data this year. It's something we're watching closely, and it's going to keep interest rates higher for longer. Originally, we were expecting about 6 interest rate cuts going into this year, but now it's more or less about 3, about what the Federal Reserve was expecting. So that's for the stock and bond market, but also in the news is Bitcoin. As you may have heard, Bitcoin is doing really well this year. It's up about 40% year to date. We've gotten some new Bitcoin ETFs, but I have a chart of Bitcoin so you can see how Bitcoin has done since the beginning of the year. It's up about 40% just this year alone. But this is more of a long-term chart of Bitcoin. And this is just a look at the history and how investing in Bitcoin may not work out. If you were to buy at the last top at 64,000, you could have potentially lost 2/3 of your investment. It's a really risky asset. It's very speculative, and it's not something we're recommending to clients. Risk is probably the first reason that we wouldn't recommend this investment. The second thing is Bitcoin doesn't produce anything, so it's not a business. It doesn't have earnings. It doesn't pay you interest for holding the investment. And also, when you buy these ETFs, you're going to pay fees, and it's going to just add on to your fees, and it's going to drag performance over time. So it's not. I'm not very excited to pay fee for something that doesn't produce anything. But those are the 3 main reasons we don't recommend Bitcoin to clients. Thanks for tuning into this market update, and hopefully we'll see you in the next one.